turned out to be a relatively flat day on Wall Street. The Dow opened higher, but took a turn midday with the market dipping into the red. The Dow Jones ended the day up around 27 points.
The Nasdaq and S&P 500 lost traction and fell a fraction of a percentage as well. Joining us for more on this is Dana Peterson. She's the chief economist at the Conference Board. Thank you for joining us, Dana. What was driving the market today? We may start there.
Well, there really wasn't much data today. We did have yesterday's CPI report where markets really rallied on the fact that there was slowing from one month to the next. And really, it made a lot of sense. There was weakening in inflation for energy, for gasoline, and also airline tickets, much of which reflects the price of jet fuel. We also saw prices come off for new and used cars. And that makes sense, just given the fact that oil prices globally have come off, and also because consumers are moving away from just buying goods. But I think maybe they took another look at the report and saw that services are still rising pretty aggressively. And that does bring risks that the Fed may raise interest rates by 75 basis points at the September meeting.
Again, of course. And we do know, we were discussing this earlier, that jobless claims rose for a second straight week in a labor market that does remain tight, though. Is there a potential risk for investors who are trying to make sense of all these different indicators when it comes to the markets?
Sure. Definitely jobless claims are rising little by little. They're still incredibly low, historically speaking, but we do expect that the labor market's going to soften somewhat. Our forecast is that the U.S. is going to descend into a recession. It may be happening now. It might have started in the second quarter. But either way, we're looking at weaker GDP growth, and that tends to mean that there will be some slackening in the labor market. And certainly jobless claims are a leading indicator to tell us which way the labor market is heading.
Wow, so that fear continues. Now, several Wall Street experts are warning that despite moving higher in recent weeks, the stock market still has further to fall. They're labeling the recent gains as nothing more than a bear market rally. Is it still a bear market, or have we officially entered that bull market by now?
Well, it's entirely plausible that the S&P and stock markets may continue to fall or return to falling after, a bit of a rally recently. And that's because we're expecting worse data coming out. GDP is probably going to produce more negative prints. We'll see domestic demand that's weaker. Payroll employment, we probably may have seen the last of the 500,000 person job gains, and the unemployment rate may tick up a little bit. Certainly, we'll be looking at various measures of confidence, even our own consumer and business confidence measures. And so there's plenty of more bad news that we're expecting, and we think financial markets will respond to that.
All right. Dana Peterson, chief economist at the Conference Board. Thank you so much for your insight.
Thank you.